Did you know that 99.5% of every bit of data that flows in the internet will cross at least one or more Broadcom chips? Yes, that's true. That's a comment by Broadcom CEO, although it's not a recent one. I think it was a year and a half ago, but still, 99.5%. That's quite something. Now, you've probably heard about Broadcom before. You've probably heard about the AI revolution or the AI bubble. There are really two camps here. Either you think it's an AI bubble and everything will pop, will go down 50%, or you think we're still early in the AI revolution and the winners will keep on winning. Of course, more recently, AI chips, even the big ones, Broadcom, Nvidia, all the others, were down 20-25% or so. And of course, in the recent week, we had a Black Monday, but then a sharp rebound. Now, Broadcom specifically, what do they do? How do they perform? What does management think? Is it still a buy today? Is it too expensive? Let's discuss all of this in this video. If you enjoy this type of videos, hit all the buttons. Like, subscribe, notification bell, do all of that. We're very close to reaching 50,000 subscribers, so I really appreciate all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Let's first start with a major overview of Broadcom, the stock. The stock right now trades at $148. The company has a market cap close to $700 billion, has a forward PE of 27 times, which is a bit higher than its 5-year mean, but you have to know that it did acquire a company called VMware for around $69 billion. Year to date, the stock is up 33.8%, and year over year, the stock is up 77.3%. So yes, overall, right now, on all of these metrics here, the stock is more expensive than its 5-year mean. But the company is also growing a bit faster than before. Price to earnings to growth sits at 1.5. Over the last couple of years, you can clearly see that Broadcom stock has been performing quite well. It's actually up 538%. Well, the analysts think that this company can continue to grow. For fiscal year 2024, they expect sales growth of around 43.8% and EPS growing just 12.4%. But then we see a reacceleration and a bit of a switch. So sales growth 16.5% in fiscal year 2025, but EPS growing much faster at 27.4%. Then in fiscal year 2026, sales growth of close to 12% and EPS growth close to 16%. The company also pays out a dividend, has a dividend yield of 1.42%, and it has been growing that dividend, especially in the last 5 years, closer to 16%. So let's say you bought the stock 5 years ago, something like that, you got 27 cents, now you're getting 53 cents. So not only is your dividend payout becoming bigger and bigger, the stock has also appreciated. Now, as you might have noticed here with the shareholder yield, it's negative. It's negative 0.84%. Why is that if the company is buying back share and pays a dividend? Well, it's because of the debt paydown yield, because of all of the acquisitions, especially VMware. So that's why shareholder yield has come down. But since this company is generating quite a lot of free cash flow comfortably each and every year, expect debt to come down each and every year as well. Now, what's the difference between Broadcom and VMware? Well, simply put, Broadcom is a tech company specializing in creating the foundational chips and software for modern digital life. They excel in semiconductors for devices and networks, as well as software for managing complex IT systems. As for VMware, now part of Broadcom is a leader in virtualization and cloud computing. By combining their strength, they aim to provide comprehensive solutions for businesses to build, run, and manage their IT infrastructure efficiently and securely. If you look at Broadcom's history of innovation acquisition, they've got two segments. One is the semiconductors and the other one is infrastructure software, which is where VMware comes into play. Now, of course, we have to talk about AI revenue, right? I mean, wouldn't be an AI video without talking about AI. So AI revenue as a percent of semiconductor solution revenue. Previously, before 2021, that was under 5%. Then in 2022, around 10%, 2023, around 15%, and then they said fiscal year 2024 target 25%. But actually that has been revised. That has been revised to 35% and over $10 billion. So that is accelerating, which is also why the stock has gone up quite significantly. to have a major recap of what has happened not only last quarter but in 2024. So in Q2, Broadcom reported consolidated revenue of $12.5 billion, up 43% year over year. That's driven by the VMware acquisition. Even excluding VMware, Broadcom's organic revenue grew 12% year over year. In Q1, they reported consolidated revenue of $12 billion. That was up 34% year over year, with strong growth in both semiconductor solutions and infrastructure software segments. Then, the AI part of things. So Broadcom's AI revenue increased by 280% year over year to $3.1 billion in Q2, offsetting weakness in other semiconductor markets. In Q1, revenue from AI accelerators quadrupled year over year, representing 35% of semiconductor revenue. As for the integration of VMware, they said that, they've made significant progress in integrating VMware, modernizing its product offerings, and transitioning to a subscription licensing model, which has been well received by customers. The VMware acquisition has accelerated revenue growth in Broadcom's infrastructure software segments. Of course, we know that when a company makes a big acquisition, it doesn't always work out, and it does take a while, so these comments were very well received. They also raised fiscal 2024 revenue guidance, so they increased their full-year revenue outlook to $51 billion, citing strength in AI and a modest recovery in non-AI semiconductor markets. Continuing here, management expects AI revenue to be much stronger, projecting over $11 billion in fiscal 2024. That's backed by Google and Meta partnership for ASIC chips. They anticipate non-AI semiconductor revenue to bottom in Q2 and recover modestly in the second half of fiscal 2024. They expect VMware's operating margins to begin converging towards that of classic Broadcom software by fiscal 2025. Networking revenue is expected to grow 40% year over year in fiscal 2024, up from their prior guidance of over 35% growth. Server storage revenue is expected to decline around 20% year over year. Broadband revenue is expected to decline the high 30s year over year, worse than their prior guidance of just 30% decline. And industrial resale is expected to be down double-digit percentage year over year, worse than their prior guidance for high single-digit decline. Overall, for the long term, management expects Ethernet to be the best networking protocol to scale out large AI clusters, with Broadcom having the best Ethernet technology for this. They anticipate 800 gigabit Tomahawk 5 switches to be mainstream for hyperscaler deployments in 24 and 25, with early adoption of 1.6 terabit technology towards the end of 2025. On the software side, Broadcom's strategy is to target the largest 600-700 customers and expand their use and adoption of Broadcom software, enabling high operating margins over 70%. Management reiterated their target of 50 to 150 basis points of annual gross margin improvement in the semiconductor business, driven primarily by product mix. And so I hope that by now you understand why this company has been getting quite a lot of coverage, why the stock has been going up, and why people still believe that this company can continue to grow. If you look at what the average analyst price target is, it still sits 30% higher than the price we're at today at $193.11, and it has gone up quite a lot, right? At the start of the year, the average analyst price target was closer to $108, so almost double year to date. Now, currently, if we look at the graph, so like I said, this stock was down closer to, let's say, 30% since its all-time highs. And then at the start of this week, the Black Monday, we went under the 200-day moving average for a day or so. But then we've seen that nice little rebound. So now we're down, let's say, just 20%. Now, it is always nice to see a stock correct itself, or let's say recover from that 200-day moving average. It has been pretty clean for quite a while. I mean, the last time we went under the 200-day moving average was back here October of 2022. I believe that was also the time when Nvidia bottomed out, ChatGPT came out. I mean, since then, this stock has gone up and up and up and up. Now, of course, the stock is not that far away from its all-time high. So you might say, look, I don't think risk reward, it makes sense. I think we are in a semi-bubble. Even if it's a great company, eventually all companies do correct. Okay, I understand. Maybe you want to wait. Maybe you want to see how things work out towards the back half of the year, interest rates coming down, macro, geopolitical stuff, etc., etc. That's fine. On the flip side, if you invest for the long run, what's the problem? You buy a great company with an excellent track record. if eventually the stock does come down, you can just buy more shares. Now, by the way, just FYI, they did do a stock split 10-1, I believe, beginning of July. Nothing changes for the company's valuation, right? Just more shares, 10-1. Nothing else changes. It's more affordable to buy a share of Broadcom today because one share doesn't cost you over $1,000. No, it costs you $138. Other than that, nothing changed. So Broadcom, my opinion, great company for the long run. If you want to chase it, okay, stock is still down 20% from its all-time high. Valuation-wise, yes, on all of the metrics that we've seen, it is more expensive than the 5-year mean, but don't forget, it now has VMware, it now has accelerating AI revenues as well. If you like these types of companies, I don't think you can go wrong with Broadcom. So that's about it for me in this video. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.